Hi students, in today's lesson we are going to see creation of goodwill in partnership. Creation of goodwill in the partnership, right? So in creation means we don't distribute the goodwill, we will create the goodwill at the time of the new partner is entering, and we will keep that goodwill and show it and the assets, right? It is an asset, an invisible asset, right? That goodwill is because the earlier partners would have done very hard work to create create a situation where you can earn a lot of profits, and they would have earned a lot of customers and retaining those customers still there, and because of that they will create a goodwill, right, when they are admitting a new partner. So we'll go through the question. Through the question we can learn how the goodwill, how the accounting entries are passed for the creation of goodwill. Okay, so let's move into the question. Sita and Geeta are pair partners sharing profits and loss in the ratio of 2 is to 1, right? 2 is to 1. This is 16, part 16. 2 is to 1. Respectively, their balance sheet as on 31st March 2020 was given below. Buildings 40,000, machinery 10,000, cash 20,000, debtors 30,000, investments 10,000, total assets is 110,000. Sita's capital 30,000, Geeta's capital 10,000, and current liabilities: creditors 25,000, bills payable 15,000, general reserve 30,000, and altogether 110,000. Okay, so I have taken all the ledger balances here, right? So on 1st April 2020, they decided to admit Radha into the partnership for 1/4 of share profits on the following terms. Radha should bring 20,000 towards the capital. First of all, capital brought by the new partner. Cash account debit 40,000. Capital of Radha is credited to 40,000, right? So that is the double entry we pass. Okay, so cash account 40,000, right? Saying capital. Capital account, say cash of 40,000. Right? Goodwill, that is okay. Goodwill account be raised in the books of the new firm at the value of 15,000. They want to create a goodwill. Then goodwill account debit 15,000, right? They are going to create a goodwill in the books. They want to show the goodwill in the books of the accounts. That goodwill is an asset, invisible asset, right? So 15,000 goodwill account debit. Partners capital account, account, that is all partners Sita and Geeta according to the old ratio. That means 2 is to 1. That is 10,000 and 5,000. 2 is to 1, right? So that is the double entry for the creation of goodwill account in the books, right? Goodwill account debit 20,000 and capital account account credited to capital account. Capital account, goodwill, will account. 20,000 means 15 by S and 5,000 to Gita. This is a double entry. Double entry is done. Right? Because we are creating a goodwill. Goodwill account debited. We want to show the goodwill in our books of accounts. Right? Goodwill is an asset. So debited to goodwill and credited to the partners capital account, old partners capital account according to the old profit sharing ratio, right? And third one is trade creditors reduced by 2000. Trade creditors reduced by 2000. So we are going to debit the trade creditors, all right, reduced by 2000. Then carried down values would be 23,000 is the creditors, then 25,000. Brought forward is 23,000. It should be 23,000 because 2,000 we are going to transfer to a revaluation. Revaluation account. Revaluation account creditors. It is a profit 2,000. Right? So what is the entry for this? Creditors account debit. Account debit 2,000 and revaluation account. Revaluation account credit 2,000. Right? You know the narration being creditors have been revalued. Right? And third one is buildings value to be appreciated by 10,000. Building value to be appreciated by 10,000. Then it going to increase by 10,000. Right? Then carrying down value would be 50,000. Right? 50,000. Brought down value increased by 10,000 and 50,000. Then buildings account should be debited. Revaluation is credited. Revaluation account. This is building account. Buildings account 10,000. So what is the double entry is buildings account debit. Account debit, revaluation credit. Account credited. How much? By 10,000. Being building have been revalued by 10,000. Increasing revaluation of buildings. Right? So cash account we have to balance it 60,000. Carried down 60,000. Brought forward 60,000. Right? Then this is 12,000. Right? Revaluation. We don't have the profit and loss. Then we can immediately transfer to the revaluation account. There's a general reserve is there. General reserve we have to 3:1. General reserve capital account. Capital account 30,000. Right? General reserve. General reserve. Right? 30,000 means 20,000 by 10,000. Right? 20 into 10. Then fifth one is partners capital account. What is it? General reserve account debit, reserve account debit 30,000, capital account SNG. SNG how much? 20,000 and 10,000. 2 is to 1 now. So that is also complete. General reserve. We had transferred general reserve to the and revaluation. There is no profit, so we directly transfer to the capital. Transfer to capital, right? So SGR, SG, SNG, right? 12,000 in 8,000 and 4,000. 8,000 and 4,000, right? Revaluation account debit, revaluation account debit 12,000 and capital account SNG, SNG 8,000 and 4,000. That is the double entry, right? 8,000 and 4,000. Revaluation account 8,000 and 4,000, right? So finished. Here revaluation account debit 8,000 and 4,000. Partners capital account credit 8,000. We have completed the double entries, so we are going to balance it. We have done the balancing here. Capital account, if we balance the capital account, it is finished, right? Balance brought forward, balance carried down, right? This is 40,000, this is 40,000, right? This is 15, 25, 29,000, 29,000, 30, 45, 65, 65, 73,000, 73,000. This is 73,000, 73,000 and 29,000, 29,000, and this is 40,000 and 40,000, right? Here we will say 73,000, 29,000 and 40,000. This is 2008, 10, 40, 142,000, right? So now what we are going to see is we are going to take the balances, right? Revaluation no balance, cash at bank 60,000, cash at bank 60,000, right? There is no provision for bad debts, then 30,000 debtors, right? And goodwill is 20,000, goodwill is 20,000, right? This is 100,000, right? Creditors is 23,000, 20, this is 38,000, right? 38,000. And buildings are 50,000. Buildings are 50,000. And general reserve nothing. 50, 60, 80,000. 80,000, 180,000. 42, 0 and 180,000. Right? This balance sheet is balancing 180,000 and 180,000. Here only the new this in creation of goodwill. This is the double entry, right? This is the double entry for creation of goodwill. Creation of accounting treatment for creation of goodwill. That is goodwill account debit, account debit, right? And old partners account, old account credit, old ratio, right? Old ratio according to old ratio. This is the one we have to remember. This is the this thing you have to remember, right? Right? If you remember, then rest of the things is okay. Okay. I hope you would have understood the lesson, and we I hope to meet you in next lesson. You can take down the solution so you can understand. If you cannot and if you have any doubts, go through again, and still if you feel that you couldn't follow it, then you can contact me and clear your doubts. Okay, thank you for joining. I hope to meet you in next session. Thank you. Bye.